Hey everyone, and welcome back to another edition of Ray's Reviews. And in today's video, we're going to be talking about Crypto.com's marketing spend and whether I think it's overboard or not. Because it seems Crypto.com is spending hundreds of millions, if not close to $1 billion yearly on marketing. And another marketing move that they recently made was to sponsor the FIFA World Cup, which is amazing news from a marketing perspective because they really are truly becoming that global recognized crypto brand. But how much money is it gonna cost them? Now, the actual sponsorship amount for the 2022 FIFA World Cup is not disclosed, but by looking at past World Cups and what other brands are paying this year, I would estimate that it could cost them anywhere between $20 to $25 million conservatively. Now, Crypto.com recently got a lot of backlash for dropping their Crypto.com earn rates again, and I hear a lot of comments like Crypto.com is wasting money on marketing, or Crypto.com is gonna run out of money if they spend so much money on marketing, or instead of spending so much money on marketing, they should just keep the Crypto.com earn rates the same. So I am gonna answer the infamous marketing spend question. Is Crypto.com running out of money due to marketing spend, and is their marketing spend sustainable? You guys definitely want to stay till the end, so stay tuned and let's go. Now, Crypto.com is a private company and well safeguarded business, so there are no financial results that are easily available to the public. You can't really go onto their website, download their financial statements, and dissect the financial data like a company like Tesla. But Crypto.com's actual business is very simple to understand, and by taking a look at the audited financial results of some of their competitors and some of the management discussion and analysis, we can look for key insights to the ways that Crypto.com is making money currently. And then we can basically dissect their marketing spend and see if it is sustainable by looking at it and comparing it to competitors. Now, currently the core bread and butter of Crypto.com's business right now is their exchange. And exchange businesses are really easy to understand. Crypto.com is the middleman, and anytime there's a transaction on the Crypto.com exchange, whether on the buy side or the sell side, Crypto.com would basically profit, and that is called the spread, which is the difference between the bid and the ask when you purchase or sell a crypto asset. And this is obviously one of Crypto.com's major sources of revenue currently, and that is all done through the Crypto.com app. But the app has significant limitations as it doesn't allow you regular trading exchange functionality like limit orders and stop orders, which definitely limits institutional adoption in the US. However, this is all about to change. You see, Crypto.com recently released the desktop version of the Crypto.com exchange to the US as part of its phase 1 initial release. And institutional investors are first in line, and this would give them full access to a fully fledged trading platform, just like Coinbase Pro. Now, this is awesome news for institutional investors, but what about retail users like us? Well, it's not our time yet. We probably have to wait a little bit longer, just like my first year in college when everyone around me was getting a girlfriend, but I had to keep waiting just a little bit longer. All right, so the first key insight is that institutional investors in the US have another legitimate exchange option, and I'll come back to this point later, so keep this in hold. But for now, let's jump to Coinbase's annual audited financial statements for 2021. All right, let's start by dissecting some of this data. And the first thing we'll do is we'll take a look at Coinbase's year-to-date transaction revenue in 2021. Now, the institutional transaction revenue is $346 million compared to their retail revenue, which is almost $6.4 billion. So institutional transaction revenue only accounts for 5% of the total transaction revenue for Coinbase. And both retail and institutional revenue increased by about a factor of 6 in 2021 compared to 2020. But if you were to take a look at the trading volume for Coinbase, institutional trading volume is almost double than that of retail trading volume. Now, compared to prior year, retail trading volume almost was 7 times higher in 2021 compared to 2020, but institutional trading volume was almost 10 times higher in 2021 compared to 2020. So what does this all mean? Well, institutional mass adoption of cryptocurrencies is coming, and they are going to be a major driver of revenue for crypto exchanges. And the launch of the Crypto.com US exchange will be massive, I feel, in terms of both a retail user and institutional user perspective. But before I go any further, I want to explain one of the major barriers to companies holding crypto assets on their balance sheet, such as Bitcoin in the US, and that is due to SEC accounting rules. For example, If you are a public company and you hold Bitcoin on your balance sheet, if the value of Bitcoin drops from the date you bought it, you have to record an impairment loss. But if subsequently the value of your Bitcoin increases in value back to your cost or even goes beyond your cost, you cannot record the corresponding gain or reverse out the impairment loss until you dispose of the asset. So you basically have an asset on your balance sheet that is not really marked to fair market value. And some investors don't really like that because it makes your earnings and your financial statements weak. If SEC accounting rules were to ever change, I personally think that public companies would pile up on Bitcoin. So all right, now that we understand this point, what I'm trying to get with this is that one new major revenue source for Crypto.com is the onboarding of institutional investors in 2022. And basically, the more trading volume they do, the more exchange fees Crypto.com acquires. And similarly with retail users as well, more trading volume on either buy side or sell side, Crypto.com makes money. So how much money is that? Now, I really don't know, as Crypto.com is a private company, but let's take a look at Coinbase again to see if we can find some key insights. Now, Coinbase had transaction net revenue of $7.3 billion year to date off 89 million retail users. I'm going to discount the $7.3 billion of net revenue by 5% to account for institutional investors, leaving me with about $6.9 billion of revenue off 89 million retail users. That means you have a revenue per user of $77 in 2021 for Coinbase. But is this a realistic statistic? As the actual number I'm looking for is not necessarily revenue per user, but I'm looking for revenue per active transacting user. Like if some people bought Bitcoin or Ethereum in 2016 on Coinbase, and basically never made another trade, then Coinbase wouldn't make any transaction revenue off these hodl and never buy investors. But what am I trying to get with all of this? Well, here's the thing. As long as the average revenue generated per transacting user exceeds the average marketing cost per transacting user, then it makes sense for a company to keep spending more money on marketing. Because as a business, doesn't that make sense to you? Like if for every $1 that you spent on marketing, you could get back $2, then wouldn't you want to spend as much money as possible because you're basically printing money. Now I know in real life that is not as simple as this, and that's because there are other transaction expenses per user as well as fixed costs and overhead. But for simplicity's sakes, let's keep this example simple. Now for Coinbase, they only spent $663 million in sales and marketing in 2021. And it's hard to get the exact data for active transacting users, so for simplification purposes, I'll just base it off the total number of retail users on the platform, and that means a sales and marketing cost of $7 per retail user off 89 million retail users compared to a $77 average revenue per user. Wait, did I get that right? So for 89 million users, Coinbase generated $77 of revenue per user compared to a $7 cost for sales and marketing per user. And I'm not even counting the sales and marketing spend that should be prorated for institutional investors, so the number is actually higher. Also note that I'm actually going to be spreading the entire marketing cost over all retail users, not just new users. And the reason I'm doing that is that because whenever you see an advertisement for Coca-Cola or McDonald's, it makes you want to drink Coke or eat a Big Mac. And when I see a Crypto.com ad, I want to buy more crypto. Now, before we get too excited, keep in mind that there are other operating expenses such as transaction expenses, technology expenses, and G&A expenses. It's not a straight apples to apples comparison, but Coinbase generated about a $3 billion profit in 2021 off 89 million retail users, which is a profit of $33 per user. And that is insane considering that most startups like Uber lose money every quarter. Now, the last reported statistic for Crypto.com was passing 10 million users in February of 2021. I don't know how many users they have today, but I personally believe, based off of my own estimation conservatively, that Crypto.com currently has between 25 to 30 million users, and that is just my conservative number. Don't burn me if I'm wrong, it's just a guess. How I came up with that? Well, they basically reported obtaining 5 million users in just 4 months previously. And with the speed of their marketing and the rate of global crypto adoption, it's very reasonable to believe that they followed at least the same trajectory and that they could acquire 15 million new users in just 1 year's time, or following the trajectory of 5 million users every 4 months. Also, the company's headcount increased from 900 employees 1 year ago to almost 3,000 plus employees, which is a 3x in headcount. So again, you don't massively hire unless you are rapidly growing. And let's say that in 2022, Crypto.com spends $1 billion in marketing. And once again, I am just throwing this number out there. This is just a hypothetical example, and that is that they spend roughly twice the amount of Coinbase, because Coinbase is probably much more established, so they don't need to spend as much money on sales and marketing. But for Crypto.com, let's say they use $1 billion in marketing divided by 20 million users, which is a $50 marketing cost per user. Again, hypothetical numbers for illustration purposes. But how much revenue does each user generate? Obviously, every new user coming on board spends a different amount on the exchange, but we are looking for an average. Well, as long as each new user can generate $50 or more in revenue for Crypto.com to cover the marketing costs, and the average revenue per onboarded user exceeds the average marketing cost per onboarded user, then we are okay. So let's use an average exchange fee of 0.4% based off of the listed rates. And let's say that the average onboarded user transacts $10,000 on the Crypto.com exchange in 2022. This would generate only $40 of revenue. Then you're basically in a loss position because you paid $50 in marketing costs for the average user, and that average user only generated you $40 of revenue. So you lose $10. But on the other hand, if you believe the average onboarded user transacts $20,000 on the Crypto.com exchange in 2022, and let's use the average exchange fee of 0.4% again, that would generate $80 of revenue, which means you have a net gain of $30. So in this scenario, you would want to acquire as many users as possible. So what is the break-even point? In my example, it would be $12,500 in trading volume in 2022. So as long as the average onboarded user transacts $12,500, then you break even in 2022. And if they transact more, then you profit. But if they transact less, then you lose. And again, I'm talking about transaction total volume, which is both buy and sell activity. Now you may disagree with my hypothetical numbers, which is totally fine. But here is one thing that we are forgetting, and that it is a one-time marketing cost to get a user onboarded. And then you have lifetime total revenue of a customer if you treat the customer right. Because your customer is not going to be just buying or selling crypto in 2022. They will buy and sell in 2023, 2024, 2025, and 2030, and so on. So as long as your average marketing cost to acquire this user is less than the total lifetime revenue of the customer, then you want to spend as much money as you can, as long as you don't run into cash flow issues. And that is why Crypto.com is spending like mad on marketing, and any crypto exchange like Coinbase or FTX or Voyager, because for every one of these exchanges, they know that the average lifetime revenue per customer is going to be much more than the average marketing cost to obtain the user, because crypto exchanges are money printers. And that is just on the retail side. For the institutional side, the trading volume they bring to the exchanges is much more than the average retail user. And if you do enough marketing to get on these institutional users, they can be even more profitable customers. Like if you can spend $1 to obtain $2, then you spend as much as possible, as long as you don't have cash flow issues and there is a reasonable payback period. And this scenario can be very real, because actually before I got into crypto, I learned this lesson very early on in e-commerce. I wanted to promote my e-commerce shop, and at the very beginning, I was like, Facebook ads or Google ads are so expensive, such a waste of money. But then as I started running these ads, I noticed that the average revenue generated per dollar of marketing spend was net positive, which meant that for every dollar I spent in marketing, I was generating $1.25 or $1.50 in revenue from all the customers that were coming to my e-commerce store through Facebook ads. So as a business owner, the smart thing to do was to just spend on ads as much as I humanly could, as long as this formula held true. Now I eventually ran into cash flow issues and inventory issues, which were bottlenecks for me in e-commerce, but the lesson that I learned was really important. And that lesson really is marketing costs, if done right, is a revenue generator, and you cannot be scared to spend or you won't get the result. Hey, why didn't someone tell me this earlier? Maybe that's why I didn't have a girlfriend in my first year of college. Or is it because I used to look like this? All right, so the only formula that matters in Crypto.com's marketing spend situation is this. Does the average lifetime revenue per acquired customer exceed the average marketing cost to acquire the customer? If the answer is yes, then Crypto.com should spend as much money as humanly possible on marketing. as long as they don't run into cash flow issues, because I've also seen profitable businesses destroyed because they couldn't manage cash well and the payback period was longer than expected. Other than that, if that's not an issue, there's no problems from my perspective. All right, before I conclude and end this video, I do want to share a few quick updates on the Crypto.com Earn program. So unfortunately, we are now past April 4th, which means we are now subject to tier limits on the Crypto Earn program. So anything that you have in the Crypto Earn program beyond $30,000 will be subject to a 50% rate deduction. This once again does not apply to your Crow stake, just things on the Crypto.com Earn program. Now I made a video on this last week on my strategies on dealing with this reduction on Crypto.com Earn rates, so make sure you guys check out this video here or in the description below if you haven't watched it yet. And one of the new platforms that I shifted some of my Bitcoin holdings to was once again Hodlnaut, which aims to have a better Bitcoin rate than its competitors. I have been getting 6.5% on my Bitcoin so far, but keep in mind that the rate is dynamic and can change every month. I did transfer some Bitcoin a few weeks ago, and I've been receiving the interest payment weekly, so everything is working fine for me so far. Now, in my last video, I mentioned that one limitation to Hodlnaut was that they only supported 6 assets, which are the assets that you see here. But I wanted to share that I received some news from one of the team members of Hodlnaut that soon Luna and UST will be added to the platform as well. So that's awesome news, as Terra Luna and UST are big projects that everyone should be paying attention to. I will make a future video on Terra Luna and UST and things that I really like about the ecosystem and my thoughts on Luna versus Crow, because there is a really interesting project on the Terra Luna ecosystem called the Chai Network that I feel all Crypto.com holders should understand and know about. And I also received news that there will be a special promotion with Hodlnaut, where there will be 2 lucky winners in an upcoming contest. One lucky user will win $1,000 of Luna, and another lucky winner will win $1,000 of UST. So make sure you guys sign up for a Hodlnaut account and wait for the contest details, because that's awesome news. Who doesn't want free crypto? I do have a referral link below in the description if you don't have a Hodlnaut account yet. And the other piece of news that I liked about Hodlnaut is that they actually received in-principle approval for a major payment institution license in Singapore from the Monetary Authority of Singapore under the Payment Services Act. And this basically helps them with removing payment thresholds and shows that they are serious about regulatory compliance in the payment and cryptocurrency space. If they get full approval, they can basically operate like a bank, which is huge news, as Singapore is one of the leaders in the crypto space. Now, Hodlnaut is actually one of the official sponsors of Bitcoin 2022, which is actually happening right now. So I really think that Hodlnaut is a company that is up and coming, and it's a company that really wants to get their name out there. So I personally really like what I see with Hodlnaut, but as always, please do your own due diligence. Once again, I do have a referral link to Hodlnaut below where we both get a $30 sign-up bonus if you deposit at least $1,000 of any asset to their platform. Once again, a big thank you if you use my affiliate link below, as you are helping me support my channel. And with that said, let's go back to the conclusion of this video. So once again, is Crypto.com spending too much on marketing? Now, as long as the formula that I mentioned holds true, no. As long as you manage your cash flow well, because I do believe that the lifetime revenue value of each customer will greatly exceed the marketing cost. Like, Amazon doesn't need to market to you anymore, like every year, and you're still gonna continue to use Amazon because you already used it, you like their services, you trust the platform. So even if they spent a lot to get you in the beginning, once you're onboarded, you're giving massive revenue to Amazon. All right, I hope this video helped you guys understand why Crypto.com is spending so much money on marketing and why I have no problems with them spending money on FIFA, Super Bowl ads, LeBron James, or Matt Damon, because I believe the formula that I mentioned above is true. The lifetime revenue per acquired customer is gonna exceed the marketing costs, but that's enough of me talking. What do you guys think? Let me know your thoughts in the comments below. And as with anything and everything, please do your own due diligence. Please do your own research. Don't trust anyone, including myself, unless you've done proper due diligence for yourself. And with that said, if you guys enjoyed that video, please like and subscribe, and I'll see you guys in the next video. Take care.